Hello, welcome back to Tay Rock Rockin' Well, the podcast. I am your host, Taylor Rockwell, and today with me, I am joined with the lovely Jason Swope. There it is.
There it is, absolutely.
How are you today?
I'm doing great, Taylor. How are you?
So great. I'm so glad to finally be recording this podcast. You and I were sitting down having drinks and you started to tell me a little bit about your life and your profession. And I immediately was like, oh, I need to have you on the podcast. And so thank you for being here and for agreeing to share your story and your experience with us.
Absolutely. Thanks for having me on. I'm excited.
Of course. So let's just jump right into it. Tell us a little bit about your background, what you do as your profession, kind of your experience with entrepreneurship, working for yourself, and, kind of give us a foundation of what we should know about Jason.
Yeah. So I grew up pretty much Southern California, transplant. My family was military. My dad served 22 years. He's still in the service. He serves as a DoD contractor. So I grew up in San Diego. I grew up loving finances and economics, actually. So through college, I studied economics. It was my passion. I actually played soccer through college too, which was fun. So I got to be a student athlete. Great experiences there, and working with teams and whatnot. Currently, I'm a mortgage loan officer with Movement Mortgage. I've been originating since 2011. I've held a couple different positions. I started off back in 2010 as a teller at a local credit union, and then worked my way up through the banking system. Hopped over to another local credit union where I built up through the ranks. At one point, I was a senior banker for years and years and years. High producer the entire way. My goal is always to build relationships. So I'm not a salesy person by nature. It's just relating with people and communicating and helping them financially was always my goal. Eventually I became a branch manager. So I hopped into the management role. I enjoyed it. There were some parts I didn't quite enjoy as much. I definitely like helping coaching and developing talent. However, my passion was in real estate. So about 7 years ago, I went into a commission-only real estate loan officer position, and then from there, I haven't looked back.
Give us a little bit about what it's like in the daily life of being a direct lender for real estate.
It's fun. There's a lot of phone calls, texts, emails that I have to respond to. I structure my day a bit differently than most. What I like to do is set up and get all my files dialed in, whether it's a new file, existing file that I'm waiting on documents, they finally come in. I try to get everything dialed in the morning. I have a pretty solid team around me. My assistant is amazing. My processor is amazing. So I do rely heavily on them as well. But, I try to get all my files dialed in the morning, and then around noon to 1-ish, I actually try to go be social with all my realtor partners. So, whether I grab some lunch with one of them or a couple of them, that's always like a goal of mine, is just to be out there and continuing to build my relationships with them.
Okay, so you said you started at the bank, and you were sharing with me that you had this huge, almost fast-paced evolution at the bank. Share with us a little bit about that experience, and then how you decided to make the jump to where you are today. And, do you regret it? Do you wish you would have did anything different? Kind of give us a little insight on how you are, where you got today.
Yeah. So out of college, I had an economics degree, and, back in 2010, it was really hard to kind of land the quote unquote, what the area median income would be for an economist, right? Without experience, I wasn't able to internship through college because of being a scholar athlete. So it took up a lot of my time. So I had to start somewhere. My mother is actually a branch manager at San Diego County Credit Union, and she got my foot in the door as a teller, where I was a teller for 5 months, and then I was actually promoted to a banker position. And then within a year and a half of that, I got promoted to another senior banker position. And then from there, I started writing and originating mortgages, HELOC applications, on top of doing auto loans, credit cards, new accounts, investment services, things of that nature. When I switched over, I actually worked for Mission Fed for almost 8 years.
So what made you want to switch?
The culture. I enjoyed the culture of Mission Fed. I had a lot of friends that worked there, and I found a good opportunity, and I went over there as more of a travel or resource specialist. So I used to go from branch to branch and help out whenever people were short staffed, whether it would be as a manager, as a banker, as a teller. I kind of did everything. I enjoyed that because I got to network within the entire mission fed community, and I built a great reputation for myself as somebody that works hard and communicates and works as a team. So from there, after about 8 months, I was tapped on the shoulder to go to one of our heavier, busier branches over there as a senior banker, where essentially it's like you're a teller supervisor. You do all the banking, mortgages, auto loans, credit cards, investment services, all the decedent procedures, all of that, and then also audited reports. So from there, the natural progression inside the branches was going to a management position, a full-on like an assistant or a branch manager position. I was hesitant because, as a banker, you have a salary, but you also do have commission or bonus income. And I was actually making more than most assistant managers. So I was really reluctant to make the jump and go into management. But at the end of the day, I was really capped on where I was at being a banker. So I went into management. I did it for about a year. And then I actually had an opportunity to join a commission loan officer team within Mission Fed's community. And my sales manager at the time, Dan Helt, he's a rock star. He taught me so much. He actually had been recruiting me for years prior to me finally jumping over to his team. And once I went to his team, my first full month as a commission loan officer, I funded over $3.5 million and just never looked back. My only regret is that I didn't jump to his team when he tapped me on the shoulder 7 years prior.
That's exactly what I was just going to ask you. Like, can you take us back to that moment in time before you made the jump and you were debating, is this jump correct for me? I make good money now. There's an opportunity to make less money, but there's also an opportunity to make more money. And what was kind of the thoughts going through your head at that time to justify taking the leap of faith? And now that you know the answer and you're like, it was well worth it, not knowing the answer at the time. And, what did that feel like? And how did you come to your decision ultimately?
Yeah, it's always it's a scary thing going from like a guaranteed income to literally no guarantee. Being on a commission only, it's frightening, especially when you own a home. Thankfully, my wife is a registered nurse, so I have what I call a sugar mama at home, which is awesome.
Foundation to keep you guys.
Foundation. We were in a good space. We had my daughter was just born, and my biggest thing on actually making the jump was I'm too competitive to not succeed, so I know I'm going to succeed. So
I love that.
I work so hard. And for me, it's I grew up in a family that they didn't quite praise grades. It was your effort. The harder you work, the harder you work more than anybody else, you're going to do better.
Okay. So would you consider yourself to be like an entrepreneur? If someone said, I'm an entrepreneur, would you resonate with that?
I would actually. And the reason why is, yes, I work for a company. I work for a direct lender and I'm a W-2 employee, but I have to build a business.
Right.
So you have to have that mindset of being an entrepreneur on how are you going to build your business. So for me, the foundations of building your business would be, having your business partners. I leaned on a couple of my really good friends that were in the real estate industry. And I started communicating with them. I started going to functions. And then as I got more transactions, the way I would communicate and work with the other agents that I had never worked with before, I would always try to call them anytime I could. The appraisal just came in. It just got cleared. Whatever. We just got it cleared to close. Like, we're ready to go. Hey, congratulations to you and your buyers or your sellers for opening escrow. Congrats for closing escrow. So anytime I can have those touch points, I took advantage of them. And I think it really just resonated well with a lot of realtors. Primarily my business is fed by realtor connections. I'd say I have anywhere from 15 to 20 different realtors. And I'm not always the number one lender, but I'm okay with being a backup credit card whenever needed. Like, I have some products that not a lot of people have that I can serve them however I need to. Or if I need to step in a rescue a loan. So if I need to come in and close the loan in less than 10 days, I can do that.
Yeah. So you're saying that your business is mostly founded on relationships that you have in your life. And I'm really similar to you being in real estate. It's always who you know, not necessarily what you know. And so kind of walk me through how you nurture relationships in your life and are you good at it? Is it something that you've mastered? Are there things you can work on? And what advice would you have for someone who's in a similar career as you and I, making sure we nurture relationships in our life?
Absolutely. So building relationships, I mean, there's different ways that you can help build a relationship. For me, it's about connecting with people, finding a common ground, having a common goal in mind, being driven together. Any way I can support them, that I always look to do that. Whether it's introducing a realtor, if they're having a hard time with their escrow company they've been working with, hey, let me introduce you to my escrow company I partner with. And a lot of times it's been great being able to be, the quarterback in that situation and bring other relationships together. Building relationships has always been what I've been good at all through my life. I'm a very social and outgoing person. So I literally just like talking to people. And whether you talk about one thing or another, I'm like a chameleon. I can literally talk about anything.
Funny that you said that. I always say I'm a chameleon too. I just always will find any reason or excuse to talk to people to make that connection, which is interesting because I'm newer in real estate, right? So I've only been really exercising my real estate business for the last handful of months now. And it changes your mindset. So like, for example, I went to Pilates the other morning, and instead of just going to Pilates and just being like, okay, take the class, go home, and then that's that, I was trying to make more of a mental effort to work you're working all the time when you work for yourself. So I'm like, okay, I'm really going to get to know the people. So I went to the Pilates class. I'm like, I'm going to make a really big effort to make sure I introduce myself to the instructor, make a connection, and hopefully just make another contact. And that's exactly what I did. And that person is so funny because the instructor, she was telling me how the night before she was like, I really want to start my own podcast or be on a podcast. And then it just so happened that we almost manifested each other to meet each other in the middle. And she's like, I asked her, I was like, would you be interested in sharing your story on my podcast? She said yes. And it's just funny, like full circle, when you change your mindset to like really helping people and just giving them resources that you have, instead of just always just not giving everyone the cold shoulder, not acknowledging them, opportunities start coming to your door a little bit more. And would you agree that everybody you know of any contact kind of can be an opportunity for both them and yourself?
I couldn't agree more. 100%. I mean, when I was a banker back in the day and I would service accounts would be like adding somebody to an account or something. There's always opportunity to help somebody that they don't even know.
Right.
So there's ways that you can control and direct a conversation where people don't even know you're fact gathering. And again, it's just my way of like mirroring people or just chatting with people. You're building a relationship, but you're finding out more that could potentially help them, whether it's financially or whatever the case. Again, building relationships is so imperative, especially in this business. I take a different approach to everything.
Yeah, tell us, how do you nurture them?
I literally take an educational and a communicational approach.
Okay.
So I don't find myself as a salesy person. If you don't want to work with me, I'm not going to fight you on it. I'm not going to be mean. Say, hey, it was great getting to know you. I appreciate the opportunity. And best of luck. If anything happens, call me. But, my job is to help educate and empower people to make a good financial decision.
And you always make a joke. What's the joke that you say when you empower people?
When I empower people,
You empower them a little too much that they always...
Oh, yeah. There are times when I do empower too much. Like, I give too much education, but at the end of the day, that's okay. The more educated somebody is in whatever they need or whatever situation they're in, the better they're going to feel about moving forward or, purchasing a home. What different loan programs are we going to look at? My job is to help educate you. These are the different options. Based off of what you're telling me, short-term and long-term goals, this one might be a better option, but again, it's your decision to make.
And ultimately, that always shows through in business and conversation. The intention behind doing business isn't just to get, really, I always tell my clients too, the way I make money isn't by closing your deal as fast as we can. It's by you trusting me, us having good relationship, that eventually you refer me to all of your friends and family. So it's more of like a long-term relationship. And I think you operate your business really similarly, where it's just, how do I always be a resource when anything in your life is going wrong? How can I find the answer, help you find a solution?
Absolutely. I tell people all the time, look, I'm not a transactional loan officer. I don't look to just help you one time, I'm here for you for the lifetime. Like, as long as you want to continue to work with me, I'm here to help you however I can. And whether that's family, friends, coworkers, whatever it may be, that's always the goal. And I feel like the more that you do that and the more times you have that mindset, it pays dividends better. Sometimes, and I know a lot of people that are very successful that are very salesy. That's totally fine. That's the way they do business, and there's no knocking it by no means. For me personally, again, I just take a different approach to things, and I think that's one of the reasons why I've found and have had continued success.
So how long have you been doing lending?
So as a commissioned loan officer since 2016 or 17. So I've actually been originating. So as a banker, I was able to write HELOC and refinance and purchase applications back in 2011. But it was a bit of a different structure because essentially I would just help facilitate and find a product for our clients or the members. And then once I help them with the application, it goes to the back office. And I didn't really see anything fully through. Going from step A to step Z, it's been since about 16, 17. Right before COVID, and I mean, COVID times were crazy, especially in the mortgage world. There was a lot of lenders out there that were just taking the low hanging fruit. And what that was refinances because rates dropped to the ground and everybody just saw that as easy money. And my primary focus the entire time through COVID was purchases, because purchases is your longevity in this type of business. Rates, refis are rate dependent. So what happens right now, like there's no refinances if any happening. Like it's pretty crazy to see. And there's a lot of refi lenders that have actually closed up their shop. They built a big operation, and as soon as rates started going up, they've all gone under.
Right, because they had no longevity to their business.
Correct. They didn't have those relationships with your realtor partners or your escrow partners or your title partners or I have an insurance broker that I partner with all the time. And again, it's just building a network.
So on here, I also want to just kind of jump the list of questions. One of the questions I had was, what do you see as the biggest trend or challenge facing your industry right now?
The biggest challenge is just interest rates. Interest rates and the price of homes, coupled with the lack of inventory. So, it comes down to economics, supply and demand, right? So when there's the supply that meets the demand, then it's a you don't quite have that crazy outbidding war type of situation. Right now, there's literally no inventory to meet the amount of buyers that are in the market. So we're seeing a lot of multiple offer situations, multiple by like 5 to 15, depending on the home. We are seeing some homes sit longer, but it's very rare. It's more home specific. Some of the homes that are kind of turnkey, ready to go, we are seeing them fly off the shelf. And, my opinion, it's buyers coming in saying, if I'm paying this high of interest rate and this high of price, I don't want to have to come in and have to do any projects or anything of that nature. But interest rates have been a big factor as well. Call mid sixes right now, low to mid sixes. And, a year ago they were in the fours, 18 months ago they were sub 3. So you can see how that changes what your payments would look like. And it literally dropped a lot of people out of the market, just priced people out because of how high interest rates have gone and what that does to your mortgage payment.
Yeah. Can you kind of give a little insight on what it means to, let's say, buy a $500,000 house at a 2% interest rate versus a 6%, and what that kind of is like being on the lending side and how that affects buyers?
Well, I mean, your interest rate it's tripling, right? So, I mean, your payment is naturally tripling. So where your payment could have been way more affordable here, now it's pushing you up to your max, if not way over your max. So that's the biggest thing. I don't have a calculator in front of me to be able to run a payment scenario, but it's drastic, and it scares a lot of people.
Can you talk about the scared people who are, let's say we have a listener right now and they're like, I really want to buy a house, but interest rates are scary. Sure. What advice do you have to that buyer right now?
So part of the coaching that I take and I present to my clients is, look, these mortgages They're not long term. Yes, you're doing a 30-year fix, whatever it may be, but the average lifespan of a mortgage is 5 to 7 years. Now we get
Because
new
they
mortgages
refinance or
well,
sell.
for different reasons. So we get new mortgages for different reasons. Whether we're a first-time home buyer, we got into our first home, we accumulated all this equity, we're going to sell and roll that equity into another home. That's one way your mortgage gets closed. We refinance. If interest rates come down, we could potentially refinance and lower that payment. We can pull equity out. So you can do a cash out refinance if it's advantageous of you, to refinance and pull that equity out. Those are primarily the big three reasons why people refinance. There are times when I help people, it's all about the math. I'm an analytical person. What does the math tell you? But there are times where they opt to take a higher interest rate and do a cash out refinance because of the amount of debt that we're paying off, or the purpose for the funds that we're using are the juice is worth the squeeze. Essentially, it was worth it to them to take the higher the interest rate.
The juice is worth the squeeze. I've never heard that.
Yep. Is the juice worth the squeeze?
Okay, interesting. Okay, so again, I'm Jason, I want to buy a house, but I'm really scared of interest rates right now. What would you tell them to do today?
What I would tell them is, look, interest rates are high right now. Yes. It is what it is, unfortunately. However, these rates are not here for the long term by all accounts. Yes, we don't have a crystal ball. We can't guarantee rates are going to come back down, but generally rates are tied to inflation, and inflation's, yes, it's on its way down, but it's still high. This mortgage that we're using right now, it might be at a 6% interest rate, but I would look at it as a short-term tool to get you into the home, knowing you once rates come back down, you'll be in a position to be able to potentially refinance. Now, keep in mind too, right now, yes, there's still a lot of buyers in the market, but once rates come back down 1 to 2% more, the market's just going to be continually flooded with the amount of buyers. So your competition, even though there's competition right now and there's a lot of it, there could potentially be a whole lot more once rates come back down.
Yeah, I guess, I didn't really plan to talk about the real estate market in this episode, but just piggybacking off of what you just said, being from the realtor side, I get a lot of clients that say, I want to wait until interest rates come down. However, what I see, the trend is, yes, right now we have a good and hefty amount of competition and things are bidding way over. I just put in an offer for a client yesterday for $100,000 over, and they're countering us. You know what I mean? So it's, and I'm sure they're countering not just me, but 12 other people as well. And it's crazy. And so I like to warn people that even though interest rates come down and your monthly payment might be down, you're also now fighting with 30 other people who want the exact same house, the exact same mortgage, and in order to secure your spot, you're bidding hundreds of thousands of dollars over, and then you're also now on the line to maybe even cover an appraisal gap, so you have to have more cash on hand. So that's kind of the pros and cons of waiting to where interest rates are versus what you're saying is feeling comfortable in the rate that you're at, making sure your numbers are at, and then securing the house, and then later working on how do we manipulate our loan and our mortgage and how do we use it to benefit us, correct?
Correct, yeah. And, naturally speaking, as interest rates come back down and buyers flood the market, your home's going to continue to appreciate. So you could be if you did like 3 to 5% down as a first-time home buyer, in 2 years, you could be in an equity position where you can potentially remove your private mortgage insurance, lower your interest rate, so on and so forth, or even sell and roll that equity into something bigger. There's a lot of things that go into it in conversations. I always get asked, is it the right time to buy? And the answer is never the same, because it's not always the right time to buy for everyone, right? That's something that, I try to empower my clients to decide whether it's the right time for them to buy or not. At the end of the day, if they're not in the financial position to, then let's put you on a roadmap. Let's get you to where you want to be, so that way we can be in a position to be able to purchase.
No, I say the similar things to my clients. I always say like the right time to buy is when you're ready to buy, and just getting yourself in the market. We're really fortunate because we live in San Diego, California, which is a really well-oiled machine and a really healthy economy. We have tons of tourism here. We have lots of military moving in. We have lots of people wanting to live here. And with those three things alone, we have a lot of money being flushed in, flushed out. And with that being said, when I make my personal investments, I feel very comfortable investing in real estate in San Diego because we always have people coming in, coming out. But I mean, have you ever worked deals out of state, and have you seen different markets that wasn't so Southern California? And would you also agree that they're way different markets, and would you give other people different advice?
Yeah, I'm only licensed in California, so I haven't done any out of state transactions. But what I do know is the California market. Obviously, every county is different, but San Diego is a very unique city, a unique county to purchase or to finance homes in, or to sell homes or buy homes. And the reason why is you hit the nail on the head. San Diego is it's a city where it's predominantly military. Now, when you have military, you also have defense contractors. Defense contractors are generally engineers, high paid salary jobs. So it creates more of a stabilized market because you can't be part-time. You can't be, on a minimum, or there's an income threshold pretty much in San Diego that you need to be able to make. And a lot of times it's these high qualified buyers being able to purchase here, which creates a more stable market in San Diego because of that. It's not like, I know a lot of bartenders, and you can make a whole lot of money making bartending. However, you don't really claim it all, right? But what happens if tips don't come in as frequently as they used to, right? So it's not like we see our bartenders or anything like that nature being able to purchase in San Diego. And the reason, again, is because of how competitive it is and the price points. You really need those salary, full-time employees, somebody with like a nurse or anything of that nature. It's just, you kind of need that income threshold to be able to purchase in San Diego, just where the price points are at. There are parts of San Diego that are more affordable, right? So, if you're willing to go further east, north, or south, you can have more flexibility with budgeting. The more centralized you are, the more desire there is to be there. So it creates more of a supply and demand issue, to where people are able to purchase higher, and the price points are going higher because of that.
Yeah, no, it's interesting. I recently was connecting with a realtor in Colorado, and they were interested in doing some investment here in San Diego. So I was like, okay, yeah, they flew in. I was like, let's talk about the market. I showed them some houses. I showed them some ARVs, which is after renovated value once a house is flipped. We started just analyzing our markets, and then I sat down, and I'm sitting, and I'm like, what are your markets like? And this is how I knew we lived in different worlds. I took them to a freshly renovated house. I go, this is how much they bought it for. This is how much they're selling it for. And they looked me in the eyes, Jason, and they said, but what if it doesn't sell? And I kind of was like, no one's ever asked me that. You know what I mean? Like, we don't have that kind of worries, like you're saying, everything's flying off the shelf, and if one person doesn't want it, that's okay, because 90 other people behind them do. So we kind of live in a bubble. We live in a very Southern California bubble, and our markets are really extremely different, I think, from other states. So I like to at least be self-aware that when we're talking about like San Diego market, and then also like the rest of the United States and what other people are experiencing, I try to be mindful that like we live in a bubble almost, and our worlds are extremely different when we're talking, because on this podcast I talk a lot about investing, and so sometimes I feel like I try to be mindful when I'm like, oh yeah, I did this and then I got $200,000 in equity in just 2 years, when that's not necessarily what other people options are in their markets.
It's an interesting point because, again, math. What does the math tell us to say? People ask me all the time, is San Diego a good place to purchase for like an investment property? And the answer is, different every time, but more so, yes, you're going to have to liquidate more because the purchase price is higher, whether you're doing 15, 20, 25% down on an investment property, right? What's your cash flow going to be? Are you going to break even? Are you going to take a loss? Is it going to be positive cash flow? What people don't really realize is the appreciation too. So a home here in San Diego is probably going to retain and sustain a higher appreciation rate than Tennessee, right? Knoxville, Tennessee, or wherever. So yes, you can get in Tennessee for a lot less. Your cash flow might be the same, if not better, but what is your appreciation going to be? Right now, I mean, there's people out there that are very strategic. They buy rental properties, multiples, and then eventually they could sell them, 1031 exchange them, and maybe buy, a multi-unit property.
Right. So, now knowing what you know about rates and being so involved in the industry and watching the real estate trends, do you do any of your personal investing in real estate, and how has it manipulated you to be more mindful of things you're purchasing, the times you're purchasing them, and also the longevity for you and your family?
Great question. So I actually have not. I bought my first house in 2016. I had it for 5 years and I sold it. I could have made it into a rental property. The cash flow would have been about $1,000 to $1,200 per month, which is great. But I sold it for $880,000. I tax-free cleared $440,000. So my thought process is the math doesn't make sense on this property. I can take that $440,000 and invest it into multiple other properties. I just so happened to purchase a brand new construction. It's a semi-custom home. Now with semi-custom homes or new construction, the downside is you just get the home and the land. And I have 1.2 acres, so I actually have quite the project under my hands. Once I'm done with my backyard, front yard, side yards, everything.
All the succulents in between.
Everything, yeah. I'll look to continue to invest in real estate. This is a long-term dream home of ours. We're putting in. I literally told my wife I want to be able to walk outside and be on a vacation. So the pool I'm putting in, it's egregious. It's bigger than I had anticipated. It's about 75 feet long. It's got a swim-up bar, sunken barbecue area. I have about 3,800 square feet of pavers going in, maybe 4,000 square feet of turf. So it's quite the bill that I'm racking up that I need to be mindful of my assets to be able to continue to invest in more real estate. But down the line, I am definitely, I want to build a portfolio. Absolutely. Now, whether that's in California or other places, it just depends on the math. I had a friend that actually purchased a property in Oregon, and their intentions were to buy it and then eventually move there after a couple of years. But they actually landed or stumbled upon a contact that actually was like more of a nurse recruiter, and their house that they purchased is literally located within 50 miles of 4 different hospitals. So they actually rented it out to travel nurses. Right. And they were able to charge more because travel nurses get stipends and whatnot. Exactly. And they ended up retaining that as a rental and then bought another property that they actually now live in. They moved there last year.
That's amazing.
Yeah.
Oh my gosh.
So pretty crazy. But I mean, you just never know until you kind of dive into it. I have family. My family's from Kentucky, Tennessee. So I have family in Tennessee. Eventually I'd love to buy a lake property that would be a second home to me, and then VRBO it or Airbnb it out with a private dock and a boat. And
is it really called VRBO or is it Verbo?
Whatever.
Is it?
I always say VRBO.
I always say Verbo.
Am I
Oh shoot! Am I saying it wrong this entire time?
No, I don't know.
Oh my gosh. Okay. Well, it was lovely to know a little bit about you, how you got into the career. We talked a little bit of business, but I want to put that aside for just a second, and I want to learn a little bit more just about Jason and who you are as a person, who's significant in your life. You mentioned you have a wife, you have kids. Tell me a little bit about who you are aside from your businesses.
I'm a family man. Family is very important. My side of the family is not very big. Again, we're transplant military, so I have my mom, my dad here. My brother married here. He actually married my wife's best friend.
Oh, really?
Yep. So
I didn't know
best
that.
Friends through high school and everything.
Oh, so that's like a perfect world, match made in heaven.
It's amazing. And then my sister married. Her husband's in the Navy. He's a nuclear engineer.
Oh, that's what Jack was doing.
Yeah.
Oh my gosh, I didn't know that.
Yeah.
Okay, cool.
So I have 4 nieces, and actually on my family side, 4 nieces and nephews, and then my wife Natalie. She's a saint. She's the sweetest person alive. She's a nurse, so I always say she's saving lives while I'm out here finding loans. We have 2 beautiful children. My oldest, her name is Peyton. She'll be 5 in October, which is crazy to say. Hunter, my little dude, he's 2. He turned 2 in January. They're both firecrackers. Peyton is a lot like me, very social, outgoing. Hunter, he's coming into his own. He's a little mischievous. He's trying to get into trouble all the time, but he's the cutest little boy. They're both amazing. My days are fun. So my wife, being a nurse, she leaves for work around 6:30. It's daddy daycare in the morning until I can take them to preschool. And then I pick them up from preschool, and she gets home at like 6:30, 7 o'clock at night. So it's daddy daycare afterwards. And it's funny because my phone doesn't stop blowing up. And then one of my biggest passions is cooking. So I'm always cooking dinner or anything of that nature.
Oh my goodness.
So that's on my side. My wife's side, she grew up, born and raised in San Diego. So her side of the family is massive.
Okay.
And it's always a party. We both sides. My dad, I learned cooking mostly from my dad, and I've taken it my own way. My wife's stepdad he's from New York. He's an Italian, so he loves cooking, and we always have a blast. We're in the kitchen all the time. It's like an Italian family. I always tell people, if you cut me open, I'm red, white, and green. I either love Mexican food or Italian food. So,
that's so funny. Yeah. Okay, so tell me then, what's the magic secret to maintaining your mental, your physical, keeping yourself in check, maintaining a marriage, maintaining being a dad, and also managing your own business and portfolio? How do you do it?
I don't know if I can tell you a secret, because I don't think I've quite mastered it myself, but it takes a village. We're lucky we have family here to help support us with kids. Professionally, I've always try to leave things, with work, but being remote, I have a home office. I do have to bring work home a lot, so it is daunting, but just communicate, support however we can. Me and my wife, we try to be so supportive. We can always be better. I think anybody can always be better at anything, so there's always room for growth and for improvements, but trying to balance it all, it's not easy. I guess the answer would be wine or whiskey.
Yeah. Well, how do you essentially manage and prioritize? Because there's no secret that it's not a destination. It's always a progression. Your children are always approaching different ages. They need different things. Your marriage is always evolving. Your business is always evolving. So I understand it's a complete circle, but how do you personally prioritize things, and do things ever get left behind? Do you ever sacrifice certain parts that you wish you didn't? And tell us a little bit about the journey of what it's like to be Jason.
I mean, you try to prioritize as much family first, right? I always, my wife and kids, number one. That's always number one. Trying to prioritize is hard. At the end of the day, I don't get a paycheck unless I'm doing business. So I have to be mindful of that. I have to designate time to be able to, when we sit down for dinner, no phones at the dinner table. Which I'm not the best at. I can definitely be better.
I was going to say, I text you and you always get back to me right away. So you never eat.
I can definitely be better, and my wife would attest to that. But I try to leave it on the table or on the counter. My phone dies 3 times a day. It's pretty crazy. I might need to get one. But I mean, the amount of time I'm on my phone, it's a lot. I'll work on the weekends. Usually I try to keep all Sundays for family. So Sundays, I'll do real open houses with my realtor partners on Saturdays, but Sundays I'm off limits. That's for my wife and kids and other family. So that's really my biggest priority, is making sure I designate time for them. And my wife is aware, coming off of, in 2021, I closed about 70 million in loans. And then in 2020, I did about 70 million. In 2021, I did about 85 million. So, they were busy, crazy years, long nights. And,
you have your hands full.
Yeah, very full. Now I'm still very, very busy, but I was able to kind of pull the reins back a little bit to be able to give more time to my family.
Something I've been talking about on the last few episodes are boundaries. I feel as if it's something I'm working on, I'm trying to implement in my life. Do you feel as if boundaries are something that really help you prioritize where you're at, and how did you come up with your boundaries, and is it something that comes easy to you, or is it something you have to practice often?
They're still being evolved, so they're still being implemented. My wife, I actually didn't even know this. It was hilarious. She got tired of me answering phone calls at 10, 11 o'clock at night or responding to text. One night I fell asleep early, and she went on my phone and put it on Do Not Disturb from 10 p.m. to 6 a.m. And that was like 2 years ago, and I haven't even changed it. So I appreciate that, Natalie. My wife's name is Natalie. So
So she implemented the boundary.
I mean, it needed to
No, of
happen.
course.
Again, I was still trying to build a business. So the way I operate is I want to be as responsive as possible, right? The faster you are, the more communication you have, the better you're going to look. So I almost took that too far, and I took calls when I shouldn't have taken calls, and they would last an hour, and then I'd get in trouble. So, really, really trying to be mindful of their time too, because they don't get to spend that much time with me. I mean, life goes by in a blink. I need to be able to spend more time with my kids, with my wife. I wish we had more date nights. I mean, we always can wish that, right? But, that's one thing that we're working on. We're working on more date nights because you need that time as much. Kids are tough. Kids are not easy. And, they take a toll on a relationship just because of the constant, right? So, making sure that we prioritize time for ourselves is imperative to a successful and long relationship and marriage.
So interesting you said that. So one of the things on here is, how do you recharge yourself? What are things that you do to make sure you have a full battery to be there for your wife, be there for your kids, be there for your business?
That's a tough question because I kind of run on coffee and booze. No, I'm just kidding. No, it really comes down to I try to get a little workout in the morning, at least 4 to 5 days a week. It's just a better start to your day. I usually don't eat breakfast. I eat my first meal is around noon, 1 o'clock. I've always been like that. I'm always so busy. I don't even think about it. Coffee supplements my food. It's probably not the healthiest. People are probably going to say that. Yep. But yeah. Did I answer?
Yeah, you did. So you were working out. What kind of workouts do you do?
So I actually, right before COVID hit, we had my daughter, well, about a year prior to COVID, my daughter was born. And having a little baby at home, I got the guilt trip for going to the gym. So I ended up just saying, hey, I'm going to buy a gym. So I bought a big power rack that I put in my garage. I have pretty much everything that I need for a gym. So my new house is a 3-car garage with the back section that I actually set up as a gym. One of my realtor partners, Caleb Ferreira, which he's part of your brokerage. He's actually neighbors right around the corner from me. We keep each other in line. We've been on a steady 3-month power trip when it comes to trying to get a workout in. Obviously we can't work out every day, but at least 3 to 4 times a week is what we try to do. And whether that's 30 minutes or 60 minutes, it's just depending on how we're feeling.
And then are you doing anything for your mental health? Maybe reading books or journaling, or like you're saying, just spending time with your wife and really getting to connect with her? Is there anything that you recommend that it's like, do this, try this?
Whenever we can, we try to find a show, and that's our time together at night. I mean, my kids go to bed later than I'd like. 7:30 to 8 o'clock, they're in bed. So we can at least watch, an hour or so of like a funny show. Like right now we're watching Ted Lasso. It's freaking.
Oh, really? What is the blonde girl on Ted Lasso?
She's she owns there's two, but the one of the primary characters, she owns Richmond Football Club.
Okay.
There's another blonde too that she's like a PR specialist.
Someone the other day told me that I look like the blonde girl from Ted Lasso, but I don't watch it, so I don't know what he was referring to.
I think it's Rebecca. Rebecca is she's the owner of the Richmond Football Club. So essentially, she got a divorce and she kept the team.
Okay, that's funny. Yeah, maybe I should start watching Ted Lasso.
It's a good show. And it starts off like the first 2 seasons are like 30-minute episodes. We're on season 3 and it's like 45. So it's not like it's an hour and a half to where you can watch 2 to 3 and still like, oh, okay, we're going to bed at a good time.
Gotcha. Okay, so a couple last things on my list I just want to pick your brain before we head out. Can you tell me about a particular or a difficult decision that you had to make in your business, and essentially how have you handled that, and what advice would you bring to us?
Yeah, so when I was at my last employer, I was getting heavily recruited. I had some great numbers, fortunate for that. And a big decision was if I wanted to make a move or not. And a lot of times I'm like, don't fix what's not broken, right? So I ended up getting a couple offers, and I turned them down, and then came back with a couple higher offers. And it really came down to, I think I could have had more work-life balance here, because I was working so much, it wasn't the company's fault. It was just me, right? So I thought that would happen. When you switch companies, I went from a portfolio lender to a direct lender who, we do have some portfolio products, but not of the nature where I was at. So I did a lot of high balance or jumbo loans. And I actually I took a dip in all those numbers, and I kind of had to revamp and rebuild my business. A lot of realtors that I was working with knew me as their jumbo lender. I can get a 5% down jumbo closed in 21 days. Now I don't quite have products like that were that competitive with interest rates. So because of that, some of my realtor partners kind of went in a different direction, which left me kind of high and dry and losing loans, unfortunately. And I said, you know what? Okay, enough's enough. So at one point, when I finally closed on my house, I was stressed out about that the whole time. Finally closed on it because it was delayed almost a year. I told myself, hey, we got a big payment. We got to start making some money. So I went back to the grind, and I built up another 5 to 10 new realtor partners over the last year. Specializing in a certain criteria, a certain niche, whether that's conventional, FHA, VA. Now we actually have some really good jumbo and high balance programs. So I'm excited, and I've been actually reaching out to my old realtor partners to trying to rekindle some of those relationships and say, hey, I have a great product for your buyers, and go from there and continue to build. So the hardest decision was to make the move over, because I had been with my last company for 8 years. I didn't want to fix what wasn't broken. It was a lot of soul searching, a lot of talking with my wife, and the amount. I was fortunate with the package that I got, so I saw it as an opportunity. Okay, let's go ahead and go into this direct lender space. I've only been with a portfolio lender. Let me see how I can do in this space. Am I really this good? Right? Is it not just the products? So being competitive, I wanted to test myself. I've found some really good success here, and I'm continuing, and I'm on a great trajectory right now.
I'm glad that you're in a more spot where you're saying I found success. Because one of the questions I had for you is, how do you define success, not only in your business but for yourself? And when you say I'm a successful person, what does that look like?
If I can provide for my family.
Bottom line.
So if I can provide for my family, and I'm doing things the right way, at the end of the day, ethically, morally, everything. I approach business differently. I always say I can sleep at night. If I can sleep at night, I'm not stressed about did I do something wrong, anything of that nature, and I'm doing business well, and I'm making everybody happy, and doing the things that I need to do to help empower people. Success comes from that naturally, in my opinion. But if I can provide for my family,
you're successful.
I'm successful.
I love that. I love that you defined it that way. That's amazing. Speaks volumes to who you are as a person.
Well, I appreciate that. Thank you.
So before we wrap up, I always kind of ask my guests, what is like the one advice that you would just like to give anybody, or if they were listening to this podcast, and this is the one thing they took away, what advice would you give this person?
So Rome wasn't built in a day. And so it takes a lot of work, consistency. Just keep grinding through, keep building relationships, just keep on keeping on. Life's a garden, dig it. Is that what Joe Dirt said?
Don't ask me. I don't know anything.
Yeah, quoting Joe Dirt over here. But no, I mean, at the end of the day, just be yourself. Don't stray from the path that you were on, for whatever reason or not. Continue to live by your morals and your ethics, and just work hard.
Be the best version of you, and success will follow.
100%.
Awesome. Well, thank you, Jason. I absolutely loved getting to know you. Thank you for sharing and being vulnerable with your business and your family, and giving us a little insight on what it's like to be Jason Swope. There it is. Where can people find you if they want to follow you, maybe on social media, or get in contact with you? What's the best way to do those things?
Yeah, so Instagram, my Instagram handle is JasonSwope_MLO, as in mortgage loan officer. My Facebook is just my first and last name, Jason Swope. I do have a website too, that I can help post. It's pretty much that's the primary way. I mean, if anybody needs to talk or wants to talk real estate, I'm happy to provide my cell phone number at 619-339-7693.
Just don't call between 10 p.m. and 6 a.m.
You can call, just leave me a voicemail, right?
I'm just kidding.
Or email. I use my email literally like a text. So my email is my first name, Jason, dot my last name, Swope, SWOPE, at movement.com.
And everything will be linked down below in the description of this podcast. So if you didn't catch that, feel free to just check out the description. I'll have everything linked and ready to go. But thank you, Jason. It was a lovely meeting. And, is there any farewell you want to say?
No, I appreciate it. Thanks for the time, Taylor. This was the first time for me. So I've never been on a podcast. A little bit nervous. Hopefully,
you did amazing.
I appreciate that.
No, you did great. You're a natural. You should just have your own podcast at this point.
Thought about it one time because I love cooking so much. I think I talked to you about this off the camera before, but I thought about doing a podcast where I would incorporate cooking and talking with.
I would watch it because, listen, I don't know how to cook. Let's start there. Well, it's not that I don't know how. I'm really good at opening a refrigerator and seeing mustard, celery, and like raisins and being able to make a meal out of it. That's like pleasant, but I'm not good at like making sauces and like curry or like being like, oh, I'm going to make something that's like I've never tasted before. That's where I'm saying I don't know how to cook, but you know how. I know you do.
For the most part, I love presenting. I don't know. I watch too much Food Network, I guess. But, you eat with your eyes first, so everything's got to look dialed in before you dig in.
That's just going to say the other thing. When I go to cook, though, I don't like to do it alone, which I'm always alone if I'm cooking. And then B, it's like the time. So if you had a podcast, you're like, let's cook together in real time, and it took that amount of time, I would do it. Totally.
Heck yeah. It's funny, too, because when Dad's in the kitchen, my kids, for the most part, leave me alone. I got a glass of wine, and I'm going to town. I'm in my element. It's my zen. That's what I do for my mental health.
You should have said that. Yeah.
100%.
That if that's your time where you're just like zoning out, cooking out, and that's your you time, then
that is my me time.
Okay. Well, I also, the other thing I like to do when I have guests on is, what's today? May
12th?
May 12th, 2023. Where do you see yourself in 5 years? And so that way in 5 years we could have you back on the podcast and we could talk about it.
5 years, that's a long time. I see myself floating in my pool. No, I'm just kidding.
I know. Jason's building a pool, but we had all this rain in Southern California that we haven't usually expected, and it's been essentially melting away.
It's been a nightmare. Can't wait for it to be behind me. Who knew we were going to have biblical rains here in San Diego? Literally, we've had more rain year to date than Seattle. Like, in what world does San Diego have more rain than Seattle, right?
5 years, you're floating in your pool.
I'm doing the same. I thoroughly love what I do. I see this as a long-term, forever career of mine. Maybe someday I might run a team to where I can have loan officers underneath me and I can help coach and mentor them. But for now, I thoroughly love what I do and the relationships that I'm able to build through it.
Well, it seems like you're killing life, killing everything that you're involved in. So thank you for sharing your words of wisdom with us, and we'll see you in the next episode. Bye.
Sounds good. Thanks.